Something big just happened in the XRP market that hasn't been seen in months. Let's break it down. Here's where we are right now. XRP is trading at $1.1651, up 1.85% in the last 24 hours. Now, I know that doesn't sound like much, but here's the thing. We're coming off some really oversold levels. The trading volume hit 117.3 million XRP, which shows people are definitely paying attention. And get this, XRP ETFs just pulled in $29.5 million in net inflows. That's institutional money flowing in while everyone else is scared. Here's why this number matters. The RSI is sitting at 34.34, which puts us deep in oversold territory. You know what I've noticed? When XRP gets this oversold, it usually doesn't stay there long. The MACD is still negative at minus 0.0653, but, and this is key, it's starting to narrow with the signal line. That's momentum shifting right there. We're also hugging that lower Bollinger Band at 1.0948, which is classic bounce territory. Now this is interesting. Japan just announced they're considering yen stablecoins and crypto ETFs. That's huge for XRP adoption in Asia. Plus, there's this negative correlation with the dollar index of minus 0.58, which means when the dollar weakens, XRP typically gets stronger. Right now, crypto is moving independently from traditional markets, and that's actually working in XRP's favor. On the regulatory front, well, it's a mixed bag. The Clarity Act probability dropped to 47%, with 200 companies now pressuring the Senate. But here's what got me excited. Ripple's participation in that DTCC tokenization project for July 2026? It's officially confirmed, and Japan's SBI Shinsei Bank is planning to reward depositors with XRP vouchers. The regulatory environment in Asia is definitely warming up. The mood right now is pretty grim, honestly. The Fear and Greed Index is at 10, which screams extreme fear. But you know what? That's actually when the best opportunities show up. The XRP army is buzzing about former Ripple CTO David Schwartz's recent comments. And here's something crucial. XRP inflows to Binance have dramatically decreased. Analysts are calling it impossible levels. That usually means selling pressure is drying up. The big players are doing something interesting. We saw 181 whale transactions involving almost 465 billion XRP. That's nearly 100% of the total volume. And remember those Binance inflows dropping? Whales are pulling XRP off exchanges. In crypto, that's usually a very bullish signal. When the smart money stops selling and starts holding, you pay attention. In plain English, we're at the stage where the major correction might be wrapping up. The Elliott Wave folks say we're in Wave C, which is typically the final leg down. The Wyckoff analysis shows we're in what they call Markdown Phase A with 64% confidence. Sounds scary, but Phase A is usually where the initial selling pressure happens, and then it's done. We could be transitioning to an accumulation phase soon. So what is the A, I think? Well, this got my attention. The short-term prediction for tomorrow is $1.5639. That's a 34.2% jump with 62.4% probability. Medium term, we're looking at $1.7292 in 7 days, a 48.4% gain with 75.9% probability. And here's the big one. Long-term 30-day prediction hits $2.0054. That's a 72.1% increase. The AI seems most confident about that medium-term target, with nearly 76% probability. But here's what could go wrong. That Clarity Act uncertainty is still hanging over us, and we're trading below all major moving averages right now. The extreme fear could trigger more panic selling if people get spooked. And honestly, when the stock market rallies, XRP sometimes gets left behind due to those negative correlations we talked about. Here's my take. Gradual accumulation, but be smart about it. I'm seeing a buy opportunity here, but don't go all in at once. Your primary entry zone is $1.15 to $1.20. If it drops more, your second entry is $1.05 to $1.10. Set your stop loss at 95 cents, that's below the technical support. Your first target, $1.75, right near that AI prediction. Second target is $2, that psychological resistance level. Start with maybe 30% of what you want to invest, then scale in based on how the market moves. That's it for today. The setup looks promising, but always manage your risk. If this analysis helped you out, smash that subscribe button and give it a like. I'll see you in the next one.